What is up, everybody? Logan here, coming at you guys again with another video. It's been a couple weeks since I made one, and I've been meaning to make one as of recent and finally got around to it. So we're going to talk about Amplified's performance on this year so far. It's been really great, and especially over the summer, right? Up until about that end of July, early August portion, being stuck in a roll through August and then running it up throughout the rest of the year, and then having a couple like rolls here and there that we bounce back out of pretty quickly. Before we get into this video, if you guys would like to check the link down in the description to join the Amplified investing group, you guys totally could. And then also leave a like as well. I'd really appreciate that. And if you guys do make it to the end of the video, leave a rubber duck emoji below, which would be cool as well. But overall, it's just reflecting these trades. We're on trade 188 this year, which we did end up getting out of this week as well. So we crossed the $6,000 reference P&L for 2 contracts. So per contract, that's $3,000 that you'd be up this year, which is really cool. Following along with the trades, which were just over 30% as well, portfolio return, which I'm pretty sure the statistic, 90% of traders don't make money, and then less than 1% of traders actually outperform the S&P. We've been able to do that for the last 3 years. So super grateful, super happy, and just overall really solid trading. So we'll go over it step by step, but I kind of want to break down the psychological part of our losses as well. And just understanding like when we have these month-long rolls, because they're built into the process, right? You're not able to go on really solid winning streaks like this. And each one of these is an individual trade itself, right? One of the little highlighted gray circles. But we have portions like this, and mathematically, these also line up, right? We have a pretty solid run up. Then you have to start to roll and hedge, doing the same thing back here, which causes a lot of fluctuation in your P&L. But at the end of the day, like per 2 contracts, $1,000 fluctuation is not bad at all, right? Especially if you're somebody who's trading with size. We did get to the low point though, to where we were pretty much down on the year after 3 months of trading. But then we quickly got out of that roll, had the rebound in trades, and then went on a little bit of a better winning streak there as well, which is pretty much what happened back here, back in August. Got stuck in a roll that lasted for about a month. And then the market eventually reverted back to the mean. We were able to hedge our way out of it as well. And then the price action continued to help us out to allow us to de-risk that position. So really interesting too, right? Like looking at our P&L for the year, but super excited, $3,000 per contract. That's pretty solid. So if you're curious on like what this strategy is, I've been making a lot of videos this year kind of talking about it, where my whole idea is keeping track of course, the price levels, but a lot of this edge comes from the expected move math. And that's when you're taking, right, SPX, taking a look at what the expected move is the day before close, and trading 1 DTEs or even 2 DTEs now that the volatility is so low, right? And we see that with a move like this. If we flip over to SPX stock, when you have this move that's like October 27th to November 10th, that's 300 points, right? Like that's a really hefty move. And then you just see volatility get crushed. And it's kind of understanding when that volatility is going to flip one way versus the other for putting yourself in a lot of the best possible situations, but also understanding that it's super uncommon to see moves like this. And most of your trading days are going to look like what our last kind of previous month had looked like around this area, where maybe you're fluctuating 10 points, 20, 30 points in a day, which is what is expected by the market makers, but their expected moves only right 70% of the time. But that can also help give an extra edge to your set of trading, right? So a lot of these, 1 to 2 DTEs, understanding the gap ups. If you have open gaps below, 98% of gaps fill. So you never know exactly when they're going to fill, but it's always nice to have that ability, that option to have that understanding of, hey, there's open gaps below, which means we probably shouldn't get too bullish, and vice versa, right? Because those are going to fill. Nobody knows when, but they can also kind of lead the way. And then especially if you have a gap down during the day, you can always play that gap fill, right? Because intraday, it's like a 50-50 shot that they'll fill intraday as well. So just adding little bits of information here and there to understand what you're doing with these trades is always very helpful. 3 to 5 days of green and red, right? The market likes to move, at least this year. I've talked about it multiple times. It'll spend 3 to 5 days in one direction before it takes a pause. Thursday, Friday, Monday, Tuesday, here's a 5-day green spell. And then it took a couple days of a pause. So looking at like taking call credit spreads after that move and then the other way. Now we have a couple of times like this most recent move, but you also have to remember that the volatility fell 30% during this time period. So you're playing with very different parameters, but we're just looking at overall on average, the stock market likes to move those 3 to 5 days in one direction, take a chill, and it continuously does that throughout the year, right? And you could even look at the last year, and we're seeing that just over and over, flip-flopping one side to the other. And of course, this is like the most remarkable move out of all of them in the previous year. So super important to keep that in mind as you're going through your trading. Where are our levels? 4,300's massive support at this moment. I would be very surprised if we were to break back beneath that by the end of the year. I do think we'll go back down to test that area probably within the next couple of weeks, but there's super strong resistance at 44.25. Basically, we closed at 44.15. We're coming back to like this heavy resistance area that we spent a lot of the summer around, right? And then before heading all the way back down to 4,100. And even if you look at the 5-year, we're just kind of chopping in the same area. But overall, I think by the end of the year, we'll take off to that 4,500. I just think generally you get a really meaningful pull down right before that happens after having a 300 and some point streak in a row with the S&P. Trade timing, I take all these trades at 2:30 p.m. in the afternoon, sometimes 3 p.m. That really depends on what the setups are and where our levels are. And lately we've kind of, we have been completely to the green side as of lately, but even the last 3 months, we've been stuck in this sort of downtrend and we're basically breaching it at the moment, right? And it looks like there's a lot of money that wants to come back into the bullish side of the market. So we have to kind of keep that in mind as well. Heading into the rest of the week, right? And into the next month. Choosing strikes, I like to put my strikes around like psychological levels. You can see that in the trade sheet quite a bit here. If I can get anything like that 35, that 45 on the put side, because I like to use 4150, right? Or if we're around, 4,300 back here, like I like to use those psychological levels. Here's a short leg at 43.20 because I like that 43.25 area. I like the 25, 50, 75s and the whole zeros for psychological prices more than anything because the market respects those. So that's about like me choosing strikes, and then I roll. But rolling is really nice because we're not using more than 10% of our portfolio in these trades. So we're not out here super leveraged or trying to get super wealthy super quick. We're just trading the market day by day with really set and proper expectations on what to expect, because it's very easy to get yourself in a bad position if you're not doing this the right way, if you're not selling options with the right mindset, because it takes time to make money, right? Like that's one thing we all have to deal with. And, if it's going to take time, we have to just play by the rules, and it's much easier to stay on the market maker side. And, even though the market makers have been getting hammered for the last couple of weeks on this move, because there's so much open gamma below, any point that they start to short this, they continue to get ran up on just because of the open gamma that's below, just ramping up the price. And you see these aggressive bullish moves, right? I just wanted to say that as we kind of wrap up this video a little bit more. So that's going to be everything for me in this video. I was really excited. I've been wanting to do this throughout the year. I haven't taken time to really sit down and talk about Amplified's performance throughout the year. It's a lot of work, right? It's being good at trading the markets takes so much mental perseverance, but I'm a big stoic. So like there's a really good Marcus Aurelius quote, which is the obstacle is the way, which is like tackling things that are difficult head on, because by doing that, it creates so much more strength and willpower in your body and your mind, and you slowly just become more comfortable with being uncomfortable. And I think that's really important. If you're somebody who wants to get good at something like trading, that takes a lot of mental perseverance, right? And understanding yourself emotionally and psychologically. And most people don't do that work, right? Most people, they just go to work, they get home, watch TV, and drink some beer, right? And do that over and over and over. And they're not really challenging themselves, right? And I think that's one really cool thing about trading alone, is if you literally challenge yourself for years and years at something, you can get really good at it just by continuing to stay focused and by continuing to find yourself in the best possible position you can be mentally for tackling these things and become one of the few people who actually outperform what the standard is. So I think that's really cool. Like, I'm always impressed by those stories, those people, the David Goggins types of people, so I find that to be really inspiring. But that's going to be everything for me. I really do appreciate all the support. Make sure you guys leave a like if you haven't, and comment that rubber duck emoji below if you made it all the way through. So that's going to be everything for me. I appreciate it, and I'll see you guys in the next video.